I will speak today about financing systems for sustainability. And it's really my great honor, for the second time, in fact, to speak to financial market professionals in ASEAN and beyond about one of the most important development topics of today's age, and that's sustainability in financial markets. So I want to first thank GEFI and AICB for the invitation. And I will start my presentation now. So let us get started. Just a little bit of context setting, and I will pass relatively quickly on that. But just to remind all of us that the action is now, and countries will not be able to limit global warmings to 1.5 degrees or 2 degrees unless there is strong commitment toward curbing CO2 emissions. And so here, just to reiterate some of the critical aspects that have been highlighted by the IPCC 2022 report. The specific risks for our Asian countries, according to the report, are 1, urban infrastructure damage and the impacts on human well-being and health. Secondly, biodiversity loss and habitat shifts. Third, more frequent and extensive coral bleaching. Fourth, a decline in coastal fishery resources. And fifth, a risk to food and water security due to increased temperatures and increased weather events. So that's for the context setting. No need, I believe, to highlight one more time the physical impacts that we're looking at for our Asian countries, but just to say that it's really across the board that countries in East Asia are exposed to climate and natural disasters. So those are the physical risks that we can think about, the actual climate and natural disasters. But there is also the economic impact that our countries will suffer. So these transition risks are really also important to highlight here. And they pertain to the economic adjustment process that will happen during the transition towards a greener and low carbon economy. Now, here's the proposed framework. On one hand, on the right-hand side, the opportunity, and that's mobilizing finance. On the other hand, the risks, and that's measuring and managing risks. Now, out of these two critical angles, there is also a cross-cutting element, which is looking at the enabling environment and the supporting policies for finance to play its role. So let's talk about the opportunity. And focusing on emerging East Asia, I wanted to share a few facts about where we are on the role of finance for sustainability. So first things first, the financing gap. The financing gap is huge. And I'm going to give a figure here. It will cost more than $1.5 trillion annually between now and 2030 to finance low carbon, climate resilient infrastructure in EMDEs. That is just infrastructure. Now, in comparison, the total amount raised through bonds and syndicated loans by middle-income countries for sustainable projects was 500 billion over 5 years between 2017 and 2021. So we see the gap between the role that the financial markets is playing now and the need in terms of the financing gap. Now, in ASEAN, the corresponding volume of financing corresponding to this 500 billion that I mentioned was actually 24 billion, and that's what you see on the left side. So we're looking at this moment at a small and nascent market, but that is also the opportunity. Now, last year, I spoke about business opportunities in this transformation towards low carbon. And I mentioned 5 key systems that actually have contributed to over 90% of global greenhouse gas emissions. Well, this slide is as relevant today as it was last year. So I thought I'd put it again on the table. So what are these sort of 5 key systems that are really holding most of the GHG emissions? Well, it's energy, it's agriculture, food and land use, it's cities and urban infrastructure, transport, and manufacturing. One thing that I want to leave you with today is the role of taxonomies. And in fact, taxonomies cut across both the opportunity, they help mobilize finance, but they also help manage the risks. So there's a lot of talk about taxonomies nowadays, especially since, in fact, the ASEAN taxonomy was issued recently. So why should policymakers focus on taxonomies? Well, it's about standard settings. So those taxonomies provide a common language for investors, for borrowers, for the real economy, the private sector, thus facilitating the alignment and supporting the scaling up of finance for sustainability. Now, as I mentioned, there's been major progress made recently in taxonomy development. And so I mentioned the ASEAN one, of course. There is also the EU taxonomy, which is a reference guide for many countries when it comes to regional taxonomies. Then there are national level taxonomies. Most taxonomies focus on the climate aspects, but also some cover the social aspects. So I wanted to bring this up here. And I'll give some examples. In fact, in Malaysia, the taxonomy in Malaysia is actually focusing on sustainable and responsible investment. Now, that said, we also need to talk about risks. And managing risks is going to be critical. And I wanted to spend some time talking about the risk side. So I'm going to highlight a few risks here when it comes to physical and transition risks. And I'm going to choose 5 of those. 1, credit risk. Credit risks that can arise for financial institutions because of the business disruption that can arise from climate events or transition activities, and that can potentially lead to higher probabilities of default and losses as exposure to climate increases. So that's number 1. The second risk for the financial system is the underwriting risk. So underwriting risk related to weather-related events and natural disasters can impact, for example, the liability of insurers. There are then liquidity risks and operational risks for banks after disasters. There are market risks, such as stranded assets. And then finally, there are reputational and liability risks. And we talk more and more about greenwashing. Basically, greenwashing being the sort of, carrying a reputational risk in case issuers fail to meet the market expectations that will be related to green financing. Now here I'd like to propose a framework for supervisory expectations that are related to risks in financial institutions. The key message is that we are still at early stage of developing supervisory frameworks for climate finance. And so it's really important for supervisors and financial institutions to actually consider these risks. So setting expectations early will be a really important driver to catalyze action in the financial sector. And I'm going to give some high-level examples of supervisory expectations. So 1, governance and strategies. So financial institutions will need to have in place some very clearly defined governance structures and arrangements. They'll need to adopt a strategic approach to consider the risks that we've been talking about and be aware of the potential impact on their business model. That's for governance and strategies. Risk management. Financial institutions should have policies and procedures in place to identify, assess, monitor, and report all material risks. So that's the second type of supervisory consideration. The third is stress testing and scenario analysis. And we've been doing a lot of that. In fact, we've been really embedding within our financial sector assessment programs support on stress testing to actually assess the soundness of the financial systems. And now let me finish with disclosures. Disclosures is really important element. Disclosure of information and metrics on the climate and the environmental risks to see how financial institutions are actually exposed to the potential impact of climate risks. And there are more and more guidelines that are actually arising in this area, including TCFD recommendations to the Financial Stability Board in this area. So that's the proposed framework for supervisors to consider. Now, I'm not going to go too much into detail, but I think what I want to say here is that, we're still looking at international standards that are being developed. And there's a big leadership for the International Sustainability Standards Board. And so MDBs such as the World Bank have a key role in ensuring that as these standards get developed, our emerging economies and member countries are actually able to leverage these standards to continue to grow. So we will continue to help implement, of course, those standards, but also implement them in a proportionate and appropriate way in our client countries. We've in fact been recommending the adoption of a phased approach for the implementation of these standards so that countries can adopt them at a pace that can allow their development. That was for the risks. Now let me conclude by highlighting a few of our initiatives. And for this, I've chosen to talk about our new country climate and development reports, which we actually call CCDRs. So we've been developing, actually, we're in our first year of developing flagship reports that are really country reports that are trying to look at climate smart development as a whole by focusing on the interplay across green, resilience, and inclusive development. These reports assess, one, how climate change and decarbonization may impact the country's development. They also look at potential areas for country action in resilience, adaptation, and mitigation to improve development outcomes. So it's about the nexus of climate and development. Ultimately, the CCDRs will identify opportunities for climate action by public and private sectors. And they will also determine how the World Bank's priorities can evolve in supporting countries meet their climate objectives as well as their development objectives. We have 30 or so CCDRs that will be launched this year. 4 of them are in East Asia: China, Indonesia, Philippines, and Vietnam. So to conclude, I will say that, we very much look forward to continuing to support our developing and emerging economies in embarking in these new climate goals. At the analytical level, supporting as World Bank Group in introducing new financial products that better match the financing of various stakeholders. We've been working for years on disaster risk management and disaster risk finance, including mobilizing private capital. We are fostering the participation in international fora of countries so that they can actually participate in the development of global standards. And we're also supporting financial institutions so that they can actually play a role in catalyzing private sector finance. And last but not least, promoting data transparency is an area which we support, and in fact, which the taxonomies that I've talked about support. So with that, I want to thank you very much for listening to my address, and I will pass the floor to Sherin. Thank you very much.